Hello, everyone. Today on the final bar, we'll hit the market from three directions: top-down macro, sector rotation, bottom-up stock picking. Markets moving higher today with the S&P touching 4,200 plus, but rolling over in the last hour, showing some distribution, some profit taking on a Monday afternoon. Overall, setting up pretty well with communication services technology pushing higher, defense on the bottom. Is this the return of growth? Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Naples, Florida. Thanks for joining us every weekday after the close as we break down these markets together, focusing on the message of the markets themselves, how the prices can reflect investor behavior, reflect the aggregate decisions of all the traders and investors out there. Price is the best way to break down changes in sentiment, to measure the strength of trends, shifts in momentum. And we hope in this 30-minute show every afternoon, we're able to focus on, in some small way, on some of those movements and help encourage you to dig deeper on your own as you go through your own charts. As you caught maybe in the intro, we're actually on the road this week down in Naples, Florida, visiting my in-laws' first trip post-COVID, which has been an adventure, but overall we're staying safe and enjoying seeing family again, which is pretty cool. Let's get to the schedule for this week. So we have some really good guests coming up this week. Tomorrow we have Louis Yanis from WealthNet Investments in Colorado. On Thursday, the 27th, Jeff Hughes of JWH Investments in Minneapolis. Also, two really cool parts of this week. The entire week is called Chart School Idea Generation. Chart School is one of the more popular parts of the StockCharts website. It is a way to learn how to invest, how to trade using technical analysis, how to manage risk, and everything in between. We are bringing that expertise and that content onto StockCharts TV, and this week it'll be a focus on idea generation. 5 different experts, each providing the way that they use the scanning engine to identify trading ideas. Also, this Thursday, I'll be hosting the next episode of The Pitch. Aaron Swenlin from Decision Point, Mary Ellen McGonigal from Mem Investment Edge, and Danielle Shea from Simpler Trading are going to join us. They'll each bring 5 tickers with them. They will present their case. We'll discuss them as a group. It's a lot of fun, and you will finish that episode with some ideas on a piece of paper. It should be great. Please join us on Thursday, the 27th. So our schedule of events for today, we do it in 3 phases. We start with the macro picture, which we'll start with now. We'll talk about the overall S&P. We'll talk about some intermarket analysis and different indications. We'll then go through sectors. That's the second piece, our sector setups, focusing on the 11 S&P sectors and how they've been evolving in recent weeks. And then finally, our last segment is called Shifting Stocks, where we focus on some individual names on the move, actionable charts that you should be focused on this week. It's a lot to cover, and let's get to the market recap. The S&P, as I mentioned, overall finishing stronger from yesterday, closing up almost 1% exactly, just below 4,200, touched almost 4,210 earlier in the day, accelerated to the upside through much of the trading day. Again, I'm always interested to look at the first 30 minutes and the last hour. That's sort of the anecdotal retail investors in the first 30 and the anecdotal institutions in the last 30 to 60 minutes. If you use that as a benchmark or as a measure of sentiment today, it tells you that the retail investors pretty optimistic buying out of the open. The more seasoned investors or the professional investors, for whatever it's worth, more on the distribution side and taking profits through the course of the afternoon. It's an interesting sort of mix to what we've seen overall. It's certainly a positive day. And if you look at some individual charts, there's some real strength in there. The breadth that I looked at earlier is about 70-something% positive. I was looking at this a little earlier, the advancers versus decliners. Yeah, at the close, there's around 70% of stocks up on the day. On the New York Stock Exchange, about 30% down, just under that. So overall, that's not a shoot the lights out, new bull market kind of up move, but certainly a healthy uptrend. Certainly after the course of fairly challenging stretches there with difficult breadth measures. So overall, doing just fine. The chart of the S&P, and then we'll get back to some of the intraday changes here. So, the chart of the S&P, every day that goes by, I feel like it looks more and more like the January pullback that we had. Now, it's certainly different because in January, you had a pullback to the 50-day, a pretty quick move in about a week or less than a week. Then you turned after about 4.5% to 5% sell off to the 50-day. You rallied back and you made new highs about 2 weeks later, maybe a week and a half after the lows. Here we've had a little different one because we've been backing and filling a little bit in this range here, but today it's propelled us above the most recent swing high. So now on a tactical perspective, the short-term time frame, we've now made a higher closing low, right? So we've made a new low, a higher low from the initial sell-off. We've now made a new swing high. So on the short term, this tactical time frame, you appear to have reverted back to the upside. That's after only about a 4.5% loss. So it's about in line with what we saw in January. I certainly am expecting more of a drawn out corrective period. Most of my guests are sort of in the same boat, and we're all looking at similar charts. We're seeing the signs of euphoria, the signs of overextension, the overbought conditions on a lot of charts, the fact that runs have been going on for quite a while. So you feel better being long-term bullish if you get some weakness in the short term that gives an opportunity for the market to reset itself, for some profit taking, for sort of more fuel in the tanks allows you to propel to new highs. We haven't really seen that yet. I would argue we've not had enough of a pullback here, of a corrective pattern in time or price to justify the euphoria that we've seen up until then. However, having said that, all of that speculation, price is price, and price today seems to be going higher. Now, what's interesting, on Friday, our market trend model, which we update after the close every Friday, turned negative on Friday. So there's three parts of this: medium term, short term, and long term. The long term remains positive, and it will do so until an extended downtrend, which doesn't seem to be happening today. The medium term and short term models are based on the weekly data and on a couple different timeframes, but really looking at the shorter term and medium term trends. When are they shifting? Given the weakness that you had midweek last week, it was enough to trigger sell signals from both of those. It's interesting that now today you're bouncing right back to the upside. And so, again, the short-term model is back in the positive territory. I don't really update these until Friday after the close. So at this point, short-term and medium-term are negative and the long-term is bullish. To be honest, that's how the market feels to me in terms of the overall structure, in terms of what should happen and most likely I think will happen. However, I have to follow the price. And again, swings like this, not just for the S&P, but on a lot of individual charts, and we'll try to look at as many as we can a little later. You'll see why overall there's certainly some encouraging signs. Elsewhere, just very quickly, mid caps and small caps up about half the gain that the S&P did. So it was really the mega caps, the large caps leading, and it was the FANG trade back on the upside for the most parts. Communication services and technology essentially tied at the top of the list. Looking elsewhere at some other asset classes here, yields down today. So the 10-year, the long bond, the TLT up about 1/3%, and 10-year yields down, testing around 160. Actually went just below 160 earlier in the day today. So coming off obviously a little higher levels. Gold prices, precious metals doing just fine, with silver moving higher, a little stronger than others. Oil was up pretty significantly, using the USO as our proxy for crude oil prices, and the energy sector, the XLE, up about 1%. Finally, Bitcoin, again, it is feast or famine with these charts. They either appear to be going up significant amounts or going down significant amounts. We're back to a raging bull market in Bitcoin. We're touching 40,000 as we record the show here just after 4 p.m. Eastern. On Monday, in the last 24 hours, Bitcoin was down to 31,000. So again, testing that low range. We'll go to the chart of Bitcoin here in a moment. When you have a really volatile period, I often point people to Fibonacci retracements, because they are really designed for volatile markets. They're designed for when a market is fluctuating between two extremes, and you want to understand, to put it into context and focus on some key levels between them. I recorded a YouTube video for my channel called Market Misbehavior last week, where I focused on the chart of Bitcoin and the importance of the 30,000 level, the importance of 42 to 43,000, which is the purple shaded or blue shaded area here. And if you look, what we've been doing now is just bouncing between these two extremes. Now that we're seeing continued strength, we're reapproaching the 200-day moving average from below. I don't see a lot of upside beyond 44,000 at the most. That would be the last Fibonacci resistance level based on some of the previous trends that we've seen. But we're again approaching that high from January, that peak before the pullback to 30,000. So 30,000 certainly a significant level. You can see how that lines up in a couple different ways using support and resistance measures. Now that we're back to the upside, I'm eyeing that blue shaded area. And again, looking to see if we find resistance there yet again. That is our macro perspective. We didn't get to the chart of gold, but if you're looking for a constructive breakout pattern, I don't know, you'd be hard pressed to find something probably better than gold prices right now. Compare that to the dollar, which is weakening. And if you talk about the traditional relationship between gold and the dollar, by the way, this is an interesting time to look at it. It is playing out as you would expect. Let's look at the 11 S&P sectors. This is our next segment, sector setups. We love to look at the 11 sectors, how they're rotating around the benchmark. I like to start with Julius de Kempener's RRG. This is the relative rotation graph. This is part of the free offering on StockCharts, and there's some pre-canned groups, by the way, that allow you to make sense of a lot of different parts of the market. We're looking at the 11 S&P sectors. I'd encourage you, by the way, if you're a stock picker, to break down the members of the S&P groups. It's a great way to see how they're trading around a sector benchmark. In the middle, and in my previous life on the institutional buy side, we spent a lot of time looking at stocks relative to their sector, relative to their industry, and it's a really good way to do that. Now, what's interesting on the RRG right now, we're looking at the daily version, which is a little more of a short-term rotation of the 11 sectors around the S&P. Look at what's been happening recently. First off, the strongest sector, and that is one of the only two still in the leading quadrant after today's movement, is consumer staples. There are only two in there right now, by the way, consumer staples and communication services, which is right around the S&P. It's essentially the benchmark right now. Consumer staples, the only thing outperforming based on the rotations, and by outperforming in this case, I mean in the leading quadrant. All these other cyclical sectors, things like energy and materials and industrials and what is that? Consumer discretionary? No, it's not. Oh, what would this be? Let's look a little bit more. Oh, financials. That makes sense. Financials all sort of rotating south-southwest, and that's the direction of deterioration. And the fact that they're far to the right means they're still outperforming. It's just the wind is coming out of the sails. It's the momentum is slowing down a little bit. What's interesting is if you think about the market as a whole, those sectors all coming off in momentum is barbelled by technology, coming up in on a momentum basis. One of the only few heading northeast, the direction of improvement. Technology, and you're seeing on a day like today, communication services and technology, the top two sectors. This is what is certainly helping the relative strength profile improve. And it's interesting, within the XLK, there's some charts that look very good. There's some charts that still look relatively questionable, to be honest with you. We'll see how many we have a chance to get into, but something like, I don't know, some of the semiconductors kind of rolling over, maybe a PayPal that's more of a congestion phase and not really, in an uptrend at this point. Apple arguably still consolidating after a pretty decent run, but overall it's enough for the sector to start to look a little better on a momentum basis than these. What will be very interesting is to see if you continue to see this rotation down. Now, in a healthy bull market phase, a lot of times what you'll have is these sectors will be on the leadership sectors will be on the right side of the rotation. They will head down and then they will take a nice 180-degree turn and they will improve and sort of do a rotation all to the right of the y-axis. And that is arguably the best, most profitable pattern that I've seen on the RRG, is looking for sectors that sort of rotate far to the right of the midpoint. And that shows you that they're outperforming fairly consistency. It's just the pace of the outperformance that's changing. So it'd be very interesting to see, especially with energy, materials, financial, some of the better, when I'm screening for ideas, I see a lot of financial charts heading up and to the right. So the fact that the rotation's coming off a little bit is something to be aware of and maybe be wary of. When you're looking at the 11 sectors here on the candle glance function, this is where you can basically look at all the charts together and start to look for similarities, look for differences, look for relative strength and weakness just in the price pattern. So my initial takeaway looking at this in recent weeks is just the overall constructive pattern that we've seen. Now, one of the issues that we've seen in recent weeks is that technology was one of the few sectors below its 50-day moving average. There was only one other one last week when we looked at it, which was consumer discretionary. And those two remain probably the least attractive on a price basis out of the 11 sectors that I'm looking at. Now, however, even the worst sector still doesn't look that bad. We're not breaking down any key levels. Pullbacks are holding support levels. Here we're breaking the 50-day in a couple places, but rotating right back to the upside. And again, I think the strength in technology today is noteworthy. I think the strength in the NASDAQ is certainly something to be thinking about. the fact when you zoom out on the chart of the XLK and you see a pattern of higher highs and higher lows is important, right? And the fact that, again, in the short term, you're seeing some tactical movements and some rotations, but overall, look at the long-term trajectory that's up. The problem for technology that I'm seeing is if you look at these arrows at the bottom, this is the relative strength of tech. And back here in 2019, 2020, what we were talking about on this show was the strength in technology and how it was good offense and good defense. Sort of worked in all markets. It was outperforming in bull market phases, outperforming in bear market phases. You think of it as a core position that you should just probably own because it's working consistently. That changed though at the September market peak. You can see from there for about the next 6 months, technology is a market performer. It's moving in line with the market. Then look at what's happened after that. And I could extend this red arrow a little down, which I'm now compelled to do as I'm making my point. Always make the charts in line with what the point you're trying to make if you can. So you can see now this red arrow illustrates that rotation down from bull market phase to consolidation phase to arguably bear market phase. And this has been a nice bounce so far in the last week or so. That's absolutely right. But still, it's within the context of this long-term downtrend. That's because other sectors are doing better. And you have stocks like Morgan Stanley making new all-time highs. Well, a lot of tech just isn't yet. And so I think overall, I'm still a little wary of the resilience of the growth trade relative to other places. When I'm screening for random ideas, I'm not finding them as much in tech as I'm finding them in some of the other sectors. Having said that, if that changes, we'll certainly talk about it as that would indicate a bit more of a rotation into some of the technology space than we've seen before. I'm very compelled by real estate as I continue to be. It was, I think, third from the top today, it looked like. When I was glancing earlier, yeah, third from the top, just edged out energy as number 3. But the XLRE making a new all-time high, or very, very close today. It looks like not quite there, but really, really close, and making a new intraday high. And the relative strength overall has been pretty decent year to date so far. And so, that's a fairly defensive sector, but certainly a higher yielding sector that gives a potential opportunity to get exposure to an area of the market that a lot of people traditionally don't like to go into, real estate, just because they're not familiar with it. But REITs are fairly liquid and tend to be a higher dividend paying. And now you're actually getting capital appreciation along with a fairly decent dividend payout. So again, I think the benefit of looking at sectors like this is you will find things that are working, and it may be things that you wouldn't expect to be working, and that's fine. Lean into what's working. Don't lean into what you think might be or should be working. Look at what the trends are actually able to justify for you. We need to take a quick break. We'll be back with my next segment, Shifting Stocks. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Thank you so much for joining us every weekday after the close for our show. As a reminder, we'll do another mailbag segment on Tuesday's show. We've gotten so many great questions from you over the course of the show, and please keep them coming. We love to hear from you. Feedback on the show is always welcome, but most importantly, questions that are coming up in your own process. We'd love to point you in the right direction, help you understand the markets through technical analysis the best we can. Shoot us an email, thefinalbar@stockcharts.com. We are on Twitter at FinalBarSCTV. On our YouTube channel, just put a comment below the video that you're watching. We'd love to answer one of your questions on the air. 2 websites I'd like to point you to as well. Number 1, StockCharts TV On Demand is fantastic. It is beautifully designed. I am super proud of the team and our team of hosts and guests that produce great content for you every trading day. As a reminder, go to StockChartsTV.com to use your email and set up a free account. We're also on all the app stores. Also, as a reminder, Chart School Idea Generation is running all this week. Go to StockCharts.com/ChartSchoolTV to learn about all the presentations, the timing, the experts, what they will be showing you. You will not be disappointed. Our next segment is called Shifting Stocks. This is where we focus now, after focusing on the big picture, looking at the strength, the rebound in stocks, bit of distribution going into the close. Now looking at sectors, seeing the improvement in technology, but also places like real estate and elsewhere, financials, where you're seeing continued strength, to be honest with you. The last piece of the puzzle, and this really mirrors in a 30-minute format, the way that I think of my days and really my weeks, focusing on different parts of the market and going broad to more specific. Now let's look at some individual charts and see what sort of themes and patterns we can uncover. We're going to start with H&R Block, HRB. Earnings are going on. We're sort of out of the bulk of earnings season, but a lot of sectors, especially consumer sectors, are sort of always in earnings season. There's always a company reporting. H&R Block was one that came out with a weaker than expected earnings number, down just over 5%. The reason why I wanted to highlight it, though, was because of the bearish engulfing pattern. Let's bring that up in here. This is using StockCharts ACP. Boy, it's actually not quite a bearish engulfing pattern as I look at it. So a true bearish engulfing pattern is when you have an up candle and then you have a higher close, and then you have a higher open on day two, right? So you open above the previous day's close, you close just below the previous day's open. That's not quite as beautiful as I thought it might be, but certainly some distribution. This is a stock making new swing highs on Friday. Certainly look to be firing on all cylinders, overbought, which is sort of an interesting development, which it has been sort of off and on overbought for a little while. But look at the rotation lower that you see on the bar. So it is an outside day if you're familiar with bar charts. So I guess we can give it that. Outside days where you have an expanded range, higher high, lower low, but a down close. And so that's certainly a negative pattern in the short term. Coming out of the overbought condition, bearish, no Lord, not a bearish engulfing pattern, an outside day, a bearish outside day, certainly not constructive here, and indicating the next couple bars more likely to be lower than higher. This is on a pretty decent dividend paying stock, HRB. So it'll be interesting to watch that one going forward. AT&T is another one. I'm sorry for jumping around a little bit, but here we're in communication services. So AT&T's had a mess of news around it. You have the whole unwinding of the media portion of it, sort of changing and focusing more on the traditional fixed telecom and mobile telecommunications. But then also you have the dividend cut that was discussed last week, and AT&T at times has been fully committed and very vocal about supporting a relative high dividend. It's been yielding around 7% given the weakness in the price recently. But if they start cutting their dividend, and I'm seeing estimates in some different places, but if they roll back that dividend, all of a sudden that component of the price is no longer, that component of the stock is no longer as appealing as it was not too long ago. So maybe worth a second evaluation if you're an AT&T holder and are thinking about that for the dividend component, which I think a lot of people are. Now, elsewhere within communication services, you have something like Alphabet. Alphabet, to be honest, looks a lot like the chart of the XLK, a lot like the technology sector, which makes sense. It's sort of some similar names in there, and you could make an argument for putting Alphabet in tech where it used to be. But you're seeing this bounce higher, and this is Alphabet didn't touch its ascending 50-day moving average this time around, didn't quite make it down to that. Now rotating back, testing its most recent swing high, and also its all-time high from just a month or so ago. So very interesting to see the rotation higher. Again, a stock like Alphabet doing well with the cap that it has and what it represents for investor optimism is certainly a key theme to pay attention to. Now, it's worth noting that within communication services, it's not all great. You have some charts that are a bit more concerning. Disney is maybe one of those. A little bounce today. After mid last week, coming off of a support level, did not quite make it to its 200-day, but it was oversold and bouncing a little bit. Again, though, when I'm taking a step back, I'm seeing a pattern of lower highs and lower lows. I'd be much more interested in this stock making a higher low or some sort of divergence, right? Making a lower low in price and a bullish divergence in momentum, which is kind of what you saw back here, right? In February, you saw the sell-off with deep momentum, and then it continued lower, and then the bullish divergence is what tells you that start looking for signs of accumulation. The higher low in that case, by the way, really indicated a rotation back to the upside. I don't know if we're going to get something that severe for sure, but stocks in downtrends, I look for signs of accumulation. I don't think you've seen that yet. Also within rotating now to consumer discretionary, a number of stocks that I think are just really at interesting points. Nike is one of those. You have a lot of stocks that are testing their 200-day moving average, testing price support. Many of them bouncing today. Nike's up about 1%, but still very much range bound. So these are not all clear charts yet. And the most recent bounce, the RSI failed at 60, which is where it's failed a number of times here in the last 3 months. So Nike overall, from the momentum characteristics and also just from the price, making lower highs and lower lows, it certainly appears to be in a bit of a downtrend. And most recently, you tested resistance and kind of rolled over, and now you're sort of at the middle of the range. It's very much in a consolidation phase. That chart reminds me a lot of the chart of PayPal, which is in consolidation mode as well. Apple, we've talked about last week, in a very similar pattern as well. Had a big run to the upside, but now you have this consolidation pattern, what's called a symmetrical triangle pattern or a coil pattern, which is where you have a narrowing of the overall range over a couple month period. Lower highs, higher lows. You're sort of rotating around a center point, which is right about at the 50-day moving average, right around 250. And now the question is, where do we break? Do we break above the upper boundary or break below the lower boundary? I would argue if there are charts that I would be paying attention to, it's something like PayPal, something like Apple, and seeing which way they resolve out of these consolidation phases. They break higher, that indicates certainly a potential, an appetite for potential upside. They break lower though, and I think there's a lot of pain potential. I think you could see an acceleration if that happens. Now, having said that, there are plenty of charts that just look great, and they're just continuing to go up and to the right. Something like Morgan Stanley, when I'm screening for ideas, a lot come up in financials that are in this sort of pattern. Just sort of up and to the right, long and strong types of charts you would feel probably pretty good about owning up until now. And it's making new highs, a new 52-week high again today, a new relative strength high, very, very close, but not quite doing it there at the bottom panel, but very, very close. And I like the fact that a number of these stocks pulled back to the 50-day. They held support, held the 50-day, now rotating back to the upside and indicating a nice move and a nice outperformance today. We need to wrap the show. I always wish we had so much time to look at individual stocks. We don't. Okay, one more. I can't help it. Deere is one that I would look at in industrials. I'm always looking for things that would tell me that something different is happening. When I'm seeing plenty of stocks hold, I look for what is not holding. John Deere arguably breaking down through support last week, did not really bounce today along with the rest of the market, flat to down today. And that's a chart I would certainly be looking at after a potential rotation lower. Now we are going to go to the 3 and 3 charts in 3 minutes. I am stealing something that a lot of analysts have loved to quote: the good and the bad and the ugly. It's a great movie title to steal for, or to borrow for looking at 3 different things, and it's a classic way of differentiating 3 things. I'll show you 3 charts that I think represent each of those. In terms of the good, we finished not too long ago with Morgan Stanley. Again, when I'm looking at charts like Morgan Stanley, like Royal Bank of Canada, RY here in the US, or RY.TO, the Canadian listing, a lot of charts like that, some regional banks, they're just good trends, good uptrends that are continuing. So when we talk about, are we rotating back into value, when we talk about is the growth trade back on and value's not working, the chart of Morgan Stanley looks just fine, and it's outperforming the S&P today and outperforming tech as well. So don't feel like those trades are over yet. Those trades are over when the trend stops going up. I don't think we're seeing that yet. The bad, I would argue something like H&R Block, a classic sort of distribution pattern, is something that's overbought. Then you get a big distribution signal like a bearish engulfing pattern. Here we're getting what's called a bearish outside day, which is a wider range on day 2, but a down close that's pushing down through the range of the previous day. And that's on weaker earnings today. Price down on weaker earnings. That's not the type of chart I would probably want to be holding here until things settle down and you look for, for how things move. Now, again, it's still not too far off of a nice 52-week high, and I think using a trend line from some of these previous lows could tell you if there's follow through the remainder of this week. Finally, the ugly, I think something like PayPal, and you would argue that, is PayPal really an ugly chart? I don't think so, but it's just, for me, this tells you an absence of upside momentum. When people are telling me it's all clear and the markets look great, like, I get the argument because I'm seeing some charts that look very, very good. I'm not struggling to find charts that are going up, but what I am seeing are names like this that I would expect to be doing very well if the market was just healthy in a normal uptrend. I'm not seeing it. And for names like Apple, for names like PayPal, Visa, MasterCard, maybe you'd put in that bucket, but I think PayPal is probably a clearer example of this consolidation pattern. Be interesting to see the way this things break. And the reason why I call this one ugly is because if it breaks to the upside, all of a sudden this goes from looking sort of okay to really good. But if that breaks to the downside, you want to see ugly, see these stocks rotate lower, see people holding Apple that realize they're underperforming in a huge benchmark name that's going to hurt their performance, and you will see a flood to the exits very, very quickly. So those are arguably PayPal and other charts like it are the most important ones to watch here. That's our show for today, folks. Thank you so much for joining us. Thanks for being patient as we do this week remotely. As a reminder, shoot us an email with any questions that you have for our mailbag segment tomorrow. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.